In this video, I'm going to be revealing exactly how much dividend income I made in the month of March from a $170,000 account, and I'm very pleased to say this was one of my highest months of dividend income ever. And to analyze this, we're going to be jumping into my do-it-yourself investor toolkit, looking at my investment dashboard, my dividend dashboard, my dividend calendar, my daily dividend calendar, and we'll also be projecting what my portfolio will look like 10, 20, and 30 years out into the future. And like always, if you'd like to download any of my spreadsheets and also get access to the ticker data add-on in Google Sheets that allows you to automatically pull in stock financials straight into your spreadsheet, you can head over to tickerdata.com at the link in the description. I'd also like to quickly say thank you to Seeking Alpha for sponsoring this video, but more on that later. Now let's go ahead and start digging in. Now, as we can see, my current portfolio value is sitting at $170,806. And at the time of this recording, this is the all-time high for my personal portfolio. And if you've been keeping up with the markets, that really shouldn't come as a surprise to you. Over the past year, we have been in a massive bull run. We can see the S&P 500 basically up around 32% over the past year, and the S&P 500 is trading right at its 52-week high as well. So again, my portfolio has definitely been reaping the benefits of those gains. Now, there's a big misconception that as a dividend investor, the only way I receive returns on my investments is through dividend payments, but we can just clearly see that is not the case. When you buy high-quality dividend growth stocks, you'll also see phenomenal capital appreciation. And in the case of my portfolio, I've seen nearly $32,000 of capital appreciation, which is a gain of almost 23%. And now if we also include my realized gains and also the dividend payments that I've received, I'm up over 28% on my personal dividend growth portfolio. So when people say that dividend investors are missing out on the huge gains in the market, well, maybe that's true for some dividend investors that are strictly focused on high yielding investments, but if you're focused on quality dividend growth stocks like Visa, Microsoft, and Broadcom, then you're definitely getting to take part in the market run-up. And for example, those are 3 dividend stocks that I personally own and love, but I'll be touching on that more later in the video. Let's go ahead and scroll over here and we can see my allocation chart. I'll go ahead and blow this up a little bit, and we can see as of right now, I am 88.1% in stocks and my cash position sitting at 11.9%. Now, I didn't contribute much new capital to my personal portfolio this month, but I did dollar cost average into one of my favorite dividend growth ETFs this month, SCHD. Now, it wasn't a lot of capital. This was one of my lighter contribution months, but my cash position did increase a little bit, so you can see I'm sitting on around $23,000 ready to invest when the opportunities present themselves. If we scroll down a little bit further, we can see my total holdings currently sitting at about 30. Long term, I think I want to get this a little closer to 25, so I need to continue to analyze my portfolio and make sure that the holdings in my portfolio align with my long-term goals. Now, the next chart we'll be looking at is going to be my cost and market value chart. We can see blue line showing my cost, red line showing the market value. So basically it's a way to analyze your cost versus market value. And for example, you can see SCHD, I've invested around 71,000 and the value of that investment is now sitting at over 84,000. So again, this is a very important chart if you're tracking your portfolio. Now, one of my favorite charts to look at is simply my growth chart. We can see the gains from my personal positions in my portfolio. And for example, my best position is Broadcom, stock ticker AVGO, sitting at 159.48%. Again, this is another great example of a phenomenal dividend growth stock and how dividend stocks can see phenomenal returns. If we jump over to AVGO, here on Seeking Alpha, we can see over the past year, they're up around 110%, but look at these dividend payments and the dividend history for this company. This company has been increasing the amount they pay out in dividends every single year for over a decade, going from 27 cents per share in 2014 to now paying out $5.25 per share in 2024. So not only do they pay out dividends, but because they're a high quality dividend growth company, those dividend payments are increasing every single year. So if I simply buy this company one time and hold it long term, those dividend payments that I'm receiving from this company are getting bigger and bigger. When you combine the fact that I'm also reinvesting those dividend payments, you really start to see the snowball effect take place with your dividend growth positions. But some other positions I've seen very nice returns on. We have Caterpillar. I'm now up over 106%. We have JP Morgan. I'm up around 88.52%. One of my largest positions is Microsoft. I'm up nearly 60% on this position. Now, my most 2 recent additions to my portfolio that I added over the past 6 months or so was Waste Management and Louis Vuitton, and these positions have already paid off pretty nicely. We can see Waste Management up nearly 38% and Louis Vuitton up around 27%. Now, it's important to keep in mind, short-term returns are amazing, and it's really fun to see those positions in your portfolio grow after you invest in them, but you have to keep in mind, I'm investing for the long term. The long-term goal with my personal dividend portfolio is to one day be able to live off dividend payments. So in order to do that, I need to find high-quality companies that can grow their free cash flow per share year over year and in turn grow their dividend payments every single year. So again, it's fun to see these gains, but even if these positions were in the red right now, I would still feel great about holding them long term. Now, if we take a look at how my portfolio is currently broken out, I'll scroll up and we can see my allocation by each individual position. Now, SCHD by far my largest position as of right now at around 49.3%. I already touched on them just a little bit, but we can see Microsoft, my other largest position, at around 8% of my entire portfolio, and I have around $13,700 allocated to Microsoft. Now, other than that, it's pretty fairly allocated across all of my other positions. Now, like I said earlier, if we scroll out just a little bit, one of the goals for my personal portfolio is to get my total holdings closer to around 25 long term. So again, I have to make sure that the holdings in my portfolio align with my long-term goals. So for example, if I go ahead and zoom back in and we look at my growth chart here, we can see there are some positions that I've seen very nice gains from, such as IBM. I'm up around 48.64%. But something I constantly have to keep in mind as a dividend growth investor looking to one day live off dividends is opportunity cost. So if we jump over to my dividend breakdown tab, again made possible with ticker data, but I plug in IBM and hit enter, we can see this company has a very nice starting dividend yield sitting at about 3.5%. That's a pretty nice starting dividend yield. If we look at the yearly dividend payout history over the past 10 years, we can see those dividend payments are increasing over time. But here's where I start to have concerns, and I really have to make sure that the holdings align with my long-term portfolio. In order to live off dividends as fast as possible, I need the holdings in my portfolio to increase their dividend payouts at a high rate every single year. And look at the 5-year dividend compounded annual growth rate for this company, sitting at just 0.64%. So in reality, because inflation is higher than this number, this company is technically paying out less in dividends every single year. We can see the 10-year dividend growth rate is a little bit better at around 4.56%, but again, recently, dividend growth has slowed quite a bit. Now, the reason behind this is because the company is not growing free cash flow at a healthy rate. We can see the 5-year free cash flow CAGR sitting at just 1%, and it really hasn't grown much at all over the past decade. And the end result of growing your dividend payments while not increasing your free cash flow is an increase in the free cash flow payout ratio over time. More and more of this company's capital is being used to pay out dividends, meaning they don't have as much capital left over to reinvest back into the business to actually grow the business. So clearly, yes, I was able to buy IBM at a great price, and I've seen great returns at over 48%, but again, it's all about opportunity cost. Is this the best place to put my money long term so that I can one day live off dividends? At the moment, I think no, and that's one of the reasons that this company is currently on my chopping block to release from my portfolio. Now, if we keep moving forward and scroll down, we can see my stock allocation by industry. Right away, we can see ETFs are the majority of my portfolio, and again, that is because of my large position in SCHD. SCHD is simply a dividend growth ETF that I can feel confident in long term. They have a nice starting dividend yield, you'll see good capital appreciation, and of course you'll see massive growing dividend payments over the years. Now moving forward, we can see technology at around 16% of my entire portfolio. We can also see financial services around 7.5%, consumer cyclical around 8.2%, real estate around 6.3%, and then we have industrials at around 4%. So overall, from a grand view, I'm really happy with the data and the performance I'm seeing from my positions on my investment dashboard. But now we need to answer the big question: how am I looking from a dividend perspective, and how much dividend income did I make in the month of March? Let's go ahead and jump over to my dividend dashboard and find out the answer to those questions. And if we zoom in over here, we can see my historical monthly dividend income. In the month of March, I made $843.87 in dividend income. And that was my second highest month of dividend income in the entire history of my portfolio. And if we look at this charted out over the past few years, you can see I started tracking this back in February of 2021. And in that month, I made around $71.72 of dividend income. Now, it is worth noting at that time, I did have more higher yielding dividend stocks in my portfolio, but as I continued to study dividend investing, I realized dividend growth investments would help me live off dividends at a faster rate. So I sold out of those higher yielding positions, and so for a while, I saw slow but steady growth in my historical monthly dividend income. But as I continued to reinvest dividends and my holdings increased their dividend payouts, we can see over the past year or so, my monthly dividend income has absolutely started to explode. Now, one of the stocks I received a massive dividend payment from this month was SCHD. And you might be wondering why my dividend income in March of 24 was a little bit lower than December in 23, because SCHD also paid me in December. Well, that's pretty easy. If we go over to Seeking Alpha and click on dividends, click on dividend history for SCHD and scroll down, we can see in December of 23, SCHD's dividend payout was 74.23 cents per share, and in 2024 it was 61.1 cents per share. And before you get nervous, no, SCHD did not cut their dividend payment. Typically the first dividend payment of the year is the lowest, and for example, you can see in 2023, the March dividend payment was their lowest in 23, and we can also see the same was true in 2022. And so if we scroll up and look at this charted out over time, we can see this is pretty standard. The dividend payments fluctuate for this company a little bit on a quarterly basis. But when we look at it on a year-over-year basis, we can see clear and consistent dividend growth at a very high rate with this fund. Now let's go ahead and zoom in and start breaking this down just a little bit more. Now right away, we can see my expected yearly dividend income now sitting at $5,214.37. I found that it's extremely motivating to see this number increase every single week and every single month. We can see the all-time dividend income I've received is sitting a little over $6,450, and my average monthly dividend payments is now sitting at $434.53. That's $434 being reinvested right back into my portfolio regardless of how much I contribute to my portfolio each month. That is how the snowball effect takes place. If we come over here, we can see not my dividend yield, but my portfolio dividend yield on cost. So this means my portfolio dividend yield on cost increases as the holdings in my portfolio increase their dividend payouts as well. If we come over here, we can see my portfolio value over time. Again, a pretty clear picture of how the compounding effect is taking place in my personal portfolio. Now, I already touched on my historical monthly dividend income, but I do want to talk about one thing. Like I said, I contributed very little personal capital to my portfolio this month, but because I received $843 in dividend payments, that's $843 I can reinvest right back into my portfolio. When I first started dividend investing around 10 years ago, I was only contributing around $50 every single month. So simply just by reinvesting dividends in the month of March, I basically contributed 16 times more to my portfolio than when I first started dividend investing. That is a clear picture of the dividend snowball taking place. Now, if we come up here, we can see my dividend income by industry. This is actually a very important chart that for some reason a lot of dividend investors actually don't track. And the reason it's so important is you don't want all of your dividend income coming from one single place or one single sector. So for example, we can see technology pays me around 7.5% of my dividend income. But if we jump over to my dividend dashboard and scroll down here, we can see technology is around 16% of my personal portfolio. So your allocation into the industry is a little bit different than the dividend income you receive from that industry. That's worth noting. We can see consumer defensive makes up around 9.5% of my dividend income, real estate around 11.7, industrials around 2.2, financial services around 5.3, and then we have consumer cyclical at 4.3%. If we scroll down, we can see my dividend yield on cost. Now, for a lot of these positions like AVGO, you can see my dividend yield on cost is sitting at around 4.04%. But if we jump back over to Seeking Alpha, type in AVGO here, hit enter and click on summary, we can see their starting dividend yield as of right now sitting at just 1.58%. Again, that is a clear picture of what happens when you buy quality companies that increase their dividend payouts over time, and especially at a good valuation. It allows you to receive a much higher starting dividend yield on cost. And then finally, I'm going to have to zoom out just a little bit for this one, but we can see what my projected annual dividend income looks like month after month. And with this chart, I started tracking in September of 22, and I was expected to receive around $1,345 every single year in dividend income. But if we look at it now, I'm now all the way up to $5,214. Again, pretty motivating to see this tracked over time. Now, the last chart we're going to look at is my dividend income from each individual stock, and it's pretty clear to see right from the get-go, SCHD pays me by far the most in dividends at $2,806. But I also have some other pretty big positions that are paying me big dividends. For example, we have Altria paying me nearly $350 every year in dividend income. We have Realty Income around $314. Vici Properties nearly $300. We have Lowe's paying me over $100. Texas Instruments around $170. So again, there's a lot of companies paying me pretty big dividends. Now, before we move forward and look at my dividend calendar, I want to talk about the reason dividend investing is so addictive. And I'm going to go ahead and show you an example. In 2022, markets were falling. For example, if we jump over to Seeking Alpha, let's just go ahead and pull up the S&P 500. Look at the past 5 years. In 2022, we saw markets decline by over 20%. People watched their accounts drop by 20%, and people quit making contributions to their portfolio, and some even panic sold their investments. But here's what's beautiful about dividend growth investing and what's so addicting about dividend growth investing. During the entirety of 2022, if we look at my projected annual dividend income, it didn't decline any. In fact, it kept climbing higher and higher and at a faster rate. And this is due to 3 different reasons. 1, obviously I was making continued contributions into my portfolio. 2, I was reinvesting my dividends. And 3, the holdings in my portfolio were increasing their dividend payouts. So when you buy quality dividend stocks, even during bear markets, your dividend income can increase. So it doesn't matter if markets are down, my dividend income increases. If markets are up, it increases. And if markets are flat, my dividend income can still increase. And in fact, for quality dividend growth investors, markets declining are actually a good thing. It allows you to buy more shares when you contribute capital to your portfolio, but also when you reinvest dividends, it allows you to buy even more shares, in turn giving you even more dividend income. And it's also worth noting that a lot of the times quality companies will continue to buy back shares. Again, another example, let's look at Visa. If we go to their financials and click on the balance sheet, scroll down, all the way down here on the balance sheet, we can see right here, total common shares outstanding. We can see the total shares outstanding for this company are constantly declining. If we look at this charted out, you can see a year-over-year decrease. And so if a company is buying back shares during a bear market, when their price per share is quite a bit lower, they can buy back even more shares, giving even more value to the shares you hold as a shareholder. Again, this is why dividend growth investing is so addictive. You not only get to celebrate when the market is up, but in fact, I honestly celebrate even more when the market is going down, because I know long-term this will tremendously help my portfolio. Now let's go ahead and take a look at my dividend calendar, but first a quick word from our sponsor, Seeking Alpha. Like you've already seen, Seeking Alpha is one of my go-to investment research platforms. I've used it already quite a bit in this video, and I use it on a day-to-day basis because it's so easy to analyze the dividend stocks that I love. Obviously, we can see returns over different time periods, but I love digging into the dividend metrics for companies. So like for example, for Visa, we can see a quick grade on all of these different dividend metrics for Visa. I can see what the dividend yield is. And again, if we scroll down, I can see my 4-year average dividend yield versus the current dividend yield. So we can really apply dividend yield theory. We can also see the dividend growth rates over different time periods. So Visa over a 3, 5, and 10-year time period obviously has phenomenal dividend growth rates. We can see the dividend safety grades as well, things like the payout ratio and the cash flow payout ratio. And then of course, I love to look at the dividend history, just like we've already done in this video. So for example, we can see Visa has a phenomenal history of increasing their dividend payments over time. We can very easily see some quick valuation metrics. We can see a lot of growth metrics such as revenue growth, and then I love looking at the profitability tab as well. Now my contact at Seeking Alpha actually reached out to me just a couple of days ago to let me know they're actually going to be running a spring sale for the next couple of weeks. And during that time period, Seeking Alpha is going to be significantly cheaper. And it's actually even cheaper than the price I originally bought Seeking Alpha at. So if you have any interest in Seeking Alpha, or you've been waiting for a discount, then now could be a good time to consider joining their community. I'll go ahead and put a link in the description and in the comments down below to Seeking Alpha if you have any interest in checking out that discount. But okay, moving forward, we are now looking at my dividend calendar. And unfortunately, a lot of dividend investors don't use a dividend calendar to track their investments, which in my opinion is an absolutely terrible decision for a lot of reasons, but mainly because it allows you to see how your dividend payments are growing over time. And this is something I actually talk about quite often on my channel, but a lot of dividend investors still just don't track this. Let's look at a quick example. We can see right here, Realty Income. This is a position I've held for a while. You can see when I started tracking this in January of 2022, Realty Income paid me $5.83. But because of the reasons I've mentioned before, I contribute new capital, reinvest dividends, and Realty Income increases their dividend payments, we can see every single month I'm receiving a little bit more and more in dividend payments from this company. So if we scroll out through over the past few years, again, I started at around $5, but we can see in November of 2023, it's now sitting at $24.25 a month. Keep moving forward, and we can see in this most recent month, I received $26.05 from Realty Income. So my dividend payments from this position have absolutely exploded. Again, we can see my dividend payments on a month-over-month basis, and we can see exactly how much each position has paid me in dividend payments since I've been holding that position. But let's go ahead and break down and see how much dividend income I received in the month of March from each position. Go ahead and start IBM $7.04, Johnson & Johnson 27 cents, KHC $1.76, Microsoft a little over $24, Realty Income $26, SJM $3.41, 3M $6.55. Scroll down a little bit and we can see Bank of America sitting a little over $21, Domino's Pizza $12.29, INTC $2.37. We have JEPI $7.53, Target at $10.30, Visa $6.79, T. Rowe Price $11.80, AVGO Broadcom $16.26, and then my big dividend payment from SCHD $641.55, one of my biggest dividend payments ever. And finally, waste management's one of the newer positions in my personal portfolio, paid me $17.25. So that's how much I received in the month of March from each individual position. If we go ahead and zoom out just a little bit now, one of the things I want to look at is my daily dividend calendar. This is another way I love to track my dividend payments over time, and it basically just tells you how much you received in dividend income on each day of the month. Now, if we scroll down, I started using this in 2022, and in 2022, I received around $1,310 in dividends. Now, here's what's interesting. 2024, we're about 3 months in, and I've almost already passed the entire amount I made in dividends in 2022. So again, that's extremely motivating, but let's go ahead and zoom in just a little bit. And we can see on March 1st, I received around $12.57. The 5th and 6th were decent days, a little over $30 combined. And the 11th through the 15th combined, I received around $75 in dividend payments. And scroll all the way over, we can see the 25th was when I received my big SCHD dividend, and in total that day I received around $641. And then the 28th and 29th were both pretty solid dividend days, and combined I received around $80.55 in dividend income from those positions. So that's where my portfolio is at as of right now, and I have to say I'm quite happy with it. But here's the big question that I need to answer, and that's how far away am I from being able to live off dividend income? And that's an important question to ask yourself, because you need to know if you are on track for your goals. Now, that's something I can easily find on my do-it-yourself investor toolkit by going over to our portfolio projection tab. If I go ahead and zoom in just a little bit, we can see I can plug in my portfolio starting size as of right now, sitting at $170,000, and assuming a price growth rate of 7%, dividend growth rate of 7%, and a starting dividend yield of around 3.5%. I'm also assuming a contribution of $2,500 a month on average. Now keep in mind, that's on average. This month, I definitely did not contribute that much to my portfolio. But once I plugged in those variables, we can see I'm able to project out what my portfolio will look like 10, 20, and 30 years into the future. Now we have to keep in mind, inflation compounds over time just like any other investment. So for example, if my monthly cost of living is sitting at about $4,000 right now, and inflation stays with the historical average of around 2%, then that means in 30 years, my cost of living would jump all the way up to around $7,250. And this is just another reason why dividend growth investing is so important. If the holdings in your portfolio aren't increasing their dividend payments over time, then they're technically paying out less in dividends because of inflation. Again, your dividend holdings have to increase their dividend payments. Now let's go ahead and jump over to my live off dividends analysis. And basically we can see this red line is my monthly dividend payments, and the black line, my monthly cost of living. So where these cross is the point at which I would be able to live off dividend payments. So let's go ahead and figure out exactly where that is. If we come over here or start scrolling down, and we can see after around 5 years, I'm still not able to live off dividend payments. You can see, no, I can't live off dividends because my monthly dividends on average are not higher than my monthly cost of living. So let's keep scrolling down, and we can see in the scenario after 10 years, no, I'm still not there, but I am starting to get quite a bit closer. Keep scrolling down, and we can see it looks like as of right now, I'm just about 15 years away from being able to live off dividend payments, because at that point, my monthly dividends are a little bit higher than my monthly cost of living. Now, here's what's really cool about dividend growth investing. At that point, even if I stopped reinvesting my dividend payments, I could still live off dividend payments forever, because the dividend growth rate of my holdings is higher than the rate of inflation. And so the opposite of that means if I were to use high-yielding dividend stocks to live off monthly dividends, at some point inflation would surpass my monthly dividends because I would stop reinvesting those dividend payments. Again, that's one of the dangers of high-yielding dividend stocks. And finally, we can get a better idea of my future portfolio outlook if we go ahead and scroll down on my do-it-yourself investor toolkit. We can see, assuming I reinvest dividends 5 years from now, I could be receiving around $16,778 every year in dividend income and have a portfolio value of around $483,000. Pretty exciting, but look at 15 years from now. I could be receiving over $65,000 every year in dividends, and finally, 30 years from now, I could be receiving over $341,176 in dividend income. Again, that's assuming I reinvest dividends. Look just how much it changes if I don't reinvest dividends during that time period. 30 years from now, it would drop all the way down to $148,000. Now, while that's still a lot of money, it's still significantly less than if I reinvested my dividends during that same time period. So there you go, that's exactly how much dividend income I made in the month of March from a $170,000 account. Like always, if you'd like to be able to download any of my spreadsheets and also get access to the Ticker Data add-on in Google Sheets that allows you to automatically import stock financials, then you can head over to tickerdata.com at the link in the description. Again, thank you to Seeking Alpha for sponsoring this video, but with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.